I can't buy a house by myself. I don't want to be a renter for the rest of my life. I want to get out of my parents' house, whatever it is, but I can't afford to do that. But hey, if we combine our resources, then we could buy something together. Let's do it. If you take title in a certain way, and then let's say your friend passes away, well, depending on how title was taken, then their heirs would essentially be co-owners of the house. It's really important that when you buy a house with a friend, you have all these difficult conversations. What do you need to know about buying a house with a friend? Oh my gosh, this question is coming up more and more and more because here's what's happening. We've got house prices that have gone completely crazy through the roof. In addition to that, we've got interest rates also that are much, much higher than what they have been in recent years. So when you combine those two, housing becomes very unaffordable. The ability to purchase a house, if you already know what I'm talking about, I'm completely preaching to the choir. But what we're seeing is a big trend right now where two friends are getting together and they're like, hey, I can't buy a house by myself. I don't want to be a renter for the rest of my life. I want to get out of my parents' house, whatever it is, but I can't afford to do that. But hey, if we combine our resources, then we could buy something together. Let's do it. Great. And then the house hunting begins and it just gets all super exciting. And voila, they get the keys to their house and they take all their pictures and they're just thrilled. Okay, that's all great until it's not. And when it's not, that is when you oftentimes discover what you've gotten yourself into once you have to untangle it. So here are a couple of things to keep in mind. If either you are looking to purchase a house with a friend or you know someone who's about to do this, and this goes for not just friend, but this goes honestly with anybody who's not married. Because when you are married, at least in California, when you're married, then community property laws really govern how you exit the house relationship. But when you are friends, there isn't that community property law that is in effect. So it's a little bit more complicated. And there are some definitely things that you want to keep in mind. So number one, when you get a house with a friend, you need to be sure that how you take title, you're very educated on how you take title. In California, there are different ways. There's tenants in common, there's joint tenancy, there's, as a single person, there's all these different ways. They call it vesting. So you want to make sure you do your due diligence and do your homework on how you are taking title. A big consequence of taking title has to do, especially if you pass away. So you can think of it like this. If you take title in a certain way, and then let's say your friend passes away, well, depending on how title was taken, then their heirs would essentially be co-owners of the house. So you could be just going along about your day. You've got your house with your friend tragically passes away. And then all of a sudden, now your friend's mom becomes the owner. Essentially, they're the heir of the estate. And now you own this house with like the mom of your friend. And maybe the mom of your friend can't afford this house. Maybe the mom of your friend wants to sell the house. Maybe the mom of your friend wants to move into the house. So, think about how you hold title and do your homework on that because that can be one thing. The other thing is your mortgage. So, if you are both on the mortgage, then that means you have signed up with a mortgage company and agreed to repay that mortgage company the money you borrowed based on the terms that they've given to you. I have yet to see a mortgage that is contingent on the relationship remaining intact. If you call up the mortgage company and you're like, you know what, I'm going to keep this place. Can you just remove, Billy's name from the loan so that I can just keep it? Let's maintain the interest rate. Let's maintain the payments, etc. But can you just get rid of Billy? They're going to say, no, we don't care that you and Billy had a falling out. I don't care that Billy cheated, with your girlfriend, right? Mortgage company doesn't care. The mortgage company says, no, Billy is just as on the hook as he ever was, because should you default on that loan, the bank wants to have as many resources that they can go after. The bank is in a much more secure position when they've got multiple borrowers that are credit worthy. So the bank's not going to just let Billy off the hook. In order to get rid of that joint loan that you have, you will need to do a refinance. So you would need to either get a new loan and you refinance it in your name alone, or you have to sell the house. So that loan has to go away one way or another. Either it's through a refinance or it is through a sale. So if you want to refinance that house, you're going to need to be able to qualify for the mortgage all by yourself. That means that you're going to need to provide all of your income, your bank statements, your debt, all of that. And you have to qualify for that loan all by yourself. And, if you qualify for the loan all by yourself, there's a good chance you didn't get yourself into this to begin with. Not to say that you didn't. I was just talking with a gentleman the other day who is in a situation just like this. He bought a place with his friend. The gentleman I was speaking with, he had the down payment. He had gotten an inheritance. So he had the down payment, which is great. His friend had the job history. You have to have been employed for, 2 years typically in the same industry. His friend had that. So the friend was more mortgage worthy, and the guy that I was speaking with had more, capital. So it was a great partnership until it wasn't. And so they went in, they got this place. Now they're going their separate ways. And the gentleman I was speaking with, he wants to keep the place. He wants to keep the home that they have so that the other guy moves out. Well, they've had it long enough to where the guy I was talking to, he has established that job history. He can't afford it. So he needs to refinance. The problem in that case was they had a really nice interest rate. It was like 3.5%, and interest rates right now are hovering 7. So he's going to need to do a refinance for the balance, but it's going to be at today's interest rate, which he's going to have to really think about if that makes sense to him or not, because his payment's going to jump up considerably. In addition to that, you've got to think about how much money is the other one going to have. They bought the house. Let's say they bought it for like 500,000 and it is now worth like 650. So if you do the math, if they bought it for 500, it is now currently worth 650. And, maybe their mortgage balance is like 480, then that's what? $170,000 in equity that they have. So that needs to somehow be divided. And the friend that's going to be moving on deserves to be, paid out his share, or, or some other arrangement should be made. So these are the things that you want to think about. And, depending on how they hold title as well, each one of them could actually sell or even give their share of that house to someone else. So you might be buying a house with a friend, and then the friend wants out of the deal. And the friend says, I'm going to sell my share to my cousin. And now the next thing you know, you're living with this dude's cousin. Think of all these things. Make sure that you not only have an agreement with one another, but that you also legally find out what you legally are entitled to do. And then certainly with regards to the loan, you also just want to make sure that you understand what you're getting yourself into with regards to that. You may have heard of things called like a loan assumption. You may have heard of a loan modification. Those things are very rare, number one. Number two, a loan modification does not change who is financially obligated to that loan. It doesn't change the names of the borrowers. So it might modify the terms. It might say, okay, you'll get a different rate. We'll extend this out for another 10 years. They can do some creative things, but a loan modification does not change who the borrowers are. A loan assumption can change who the borrowers are. You can assume the loan. However, you have to fully qualify for it all by yourself, and very few loans are assumable. So an assumable loan is a term that was already baked into the terms of your loan. It either is or it isn't assumable. Just because a bank says go ahead and apply as an assumable does not necessarily mean that your loan was assumable. I get that a lot too. I get where people say, well, my loan's assumable because the bank told me to go ahead and fill out all the application to assume the loan. So they think that their loan is assumable because the bank is having them apply for an assumption. And then later on, they find out, oh, it was declined because this is not an assumable loan. So, very few loans, a very small percentage of loans are assumable. Those are the two biggest things. It is title and mortgage, and the two are not necessarily tied together. You can deed off the mortgage, but you can't just easily get off the loan. So just because you deed off a mortgage doesn't take your name off the loan. Just because you refinance and get off a mortgage doesn't mean that you have severed that deed. And so also consider what it's like if you remain a legal owner on the deed and the legal liability you have of keeping that house. So maybe you bought a house with a friend and the mortgage was in the friend's name the whole time. And getting your name off the mortgage is not a problem, but you're busy, you're getting on with your life, you pack up, you move, you get a new place, and you forget to sign a deed that deeds your name off the title. You're still legally liable for that house. How can that, come back to haunt you? Maybe somebody gets injured on your property. Maybe you've got a tree that falls in the neighbor's yard and destroys their house, whatever. They go after the legal owners of the property. So it's really important that when you buy a house with a friend, you have all these difficult conversations. I get it. They're a total buzzkill because you're super excited and in the moment and you're like, oh, I'm sure everything's going to be fine. He's cool. I'm cool, until it's not. So have these conversations, forward this video to your friend, forward it to anybody you think needs it. And hey, let me be the bad guy and tell them all the things you need to think about. So that is my advice for you. Do your homework. Don't assume that it's all going to be, peaches and roses and Candyland, because you guys probably have a lot more years of living. Circumstances are going to change and you're going to need to deal with this house that you guys bought together. Hopefully this helps. And if it did, be sure to smash that like button, subscribe, put any comments. If you have any questions, please put them in the comments. If I forgot to go over something or if you've got a unique circumstance, hey, let me know because I would love to hear about it.